is up about 90 points, 100 points now almost, 95 points.
We followed it up with a near 200-point gain on the Nifty.
Has been steady for the Nifty, up 150 points.
It was a gap-up opening of about 80 points, but from there, we added on another 100-odd points. Just in the last, maybe second half of the trading session, we've come off a tad bit.
You're still looking at a solid 100-point move on the Nifty. Sensex up about 430-odd points. Banks actually saw some of the gains getting trimmed off. There was profit-taking in the metals part of the market.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track around 6 hours of the day's trading action and just 5 top headlines. I'm Nigel D'Souza. Here are the headlines for the day. No Monday blues for D Street as the bulls build on Friday's pullback. The Sensex gains over 400 points. The Nifty reclaimed 17,700 despite coming off intraday highs. PSU stocks hold center stage while mid-caps do well. Bank stocks underperform. Vedanta chairman Anil Agarwal dismisses concerns over debt, says the group's position is comfortable, also urges the government to sell its residual stake in Hindustan Zinc, saying the promise was made 20 years ago. Adani Group stocks continue their gains for the 5th session in a row. 8 of the 10 group stocks end in the green. The group adds market capitalization to the tune of around 30,000 crores today. Prominent stakeholder LIC tells CNBC-TV18 that they are more confident about the businesses following their meeting with the management. Britannia slips as analysts flag tightening margins caused by wheat and milk inflation. Nykaa also stumbles on weak commentary as Macquarie sees a 23% downside in the stock. The brokerage also says that the company's margins could strain its push into smaller towns. And in stocks making news, Mahanagar Gas jumps 8% after analysts share its acquisition of Unison Enviro. Meanwhile, Power Grid gains as it becomes the top bidder for 2 projects in Chhattisgarh. Well, plenty lined up on the show, but let's run you through the lineup. Well, we'll bring you the market opinion coming in from Rahul Chadda of Mirae Asset Global Investments. And the big corporate voice on the show is Vedanta Resources Chairman, Mr. Anil Agarwal. Well, before we get to that, here's a look at the market action. The Sensex gained close to around 400 points in trade. The Nifty was up more than 100 points as the last trade began the week on a positive note. The Nifty managed to regain the 17,700-odd mark despite coming off the intraday highs. The bank stocks, well, they underperformed the blue chips today. Surbhi is standing by to run us through a quick market wrap. Surbhi?
Well, the bulls are going into the Holi holiday on a pretty buoyant green note, you can say that. And that's because after what was a strong Friday, we got a good follow-through on Monday. Now, the nitpickers will say that the market shaved off some of the gain by the end of the trading day. But I'll tell you why the bulls won't be too disappointed with that. Because number one, this was a very wide move. It was cutting across sectoral lines. And it was a move which saw mid-caps participating as well. It wasn't just a few group of large caps or a clutch of large cap stocks, blue chip stocks that was taking the market higher. The Nifty, by the way, has crossed the 20 DMA today. It crossed the 200 DMA on Friday itself, and today it's taken out the 20 DMA. So continues that upward trajectory. Let's talk about the constituents. PSUs are a big theme in this market. This government capex theme is finding steady takers. And today, you had so much action in stocks like in ONGC, in Oil India, Power Grid, NTPC. So this was a very solid theme. IT and autos saw some buying. That reflects in if I talk about the Nifty gainers list. So you had Tata Motors with good numbers from UK, JLR sales coming through. You had an Infosys and a TCS. You had Reliance contributing. You had an HDFC Bank contributing. So very diverse in terms of the up move, in terms of the leadership of the rally. Metals saw some profit taking after the big run-up. That was evident in stocks like Hindalco, TCS, etc. And then we had, of course, the Adani Group, which saw some follow-on buying, though the gains cooled off on stocks like Adani Ports or Adani Enterprises. Must mention Mahanagar Gas, by the way. They've done their first ever acquisition and the stock was flying away, one of the best mid-cap stories in today's market action. Well, the litmus test for this market, of course, is going to be when it comes back from the Holi holiday and actually gets in towards the weekend. Friday, we get the non-farm payrolls data from the US. Now, it is that report that triggered the move in the 10-year yield a month back. We need to see if the numbers are going to be a little more sanguine this time and whether yields will remain in check. But until then, the bulls can get into the Holi holiday on an optimistic note.
Indeed, Surbhi. Thanks so much for that. Well, market opinion, Rahul Chadda of Asset Global Investment says that he expects more rate cuts from the US Fed by the end of the year. Also adds that he is positive on new age companies. Let's hear him out.
expecting some interest rates cuts from Fed towards the end of the year. I think that's got a pushback with this sticky, lingering inflation in the US. And that would be kind of a headwinds for markets globally. Dollar may continue to be a bit strong. In India also, we are seeing signs of slowdown. But look, any medium-term investors should take this opportunity of this time correction, prime correction to add to equities exposure. So from a medium-term perspective, this is a good time to buy the names we like. Near-term is going to be choppy. Near-term is going to be choppy. Ability to or liquidity to add for next 6-9 months, or at least that kind of an attitude that it doesn't matter that these names may go down in 6 months, but eventually over 12-18 months they'll do well. What we have in our funds is small exposure. We've got about 1 to 1.5% exposure across these names, and we're happy to hold them from a medium-term perspective. Near-term, like as we discussed, as things are going to be slow, market is going to react to that. Competitive intensity is going to increase. But if we see what these companies have done over the last 2-3 years, despite strong competition, they've gained kind of a significant foothold in their respective categories. They've got a good connect with the consumer, and longer term, I think that's what matters. So one's got to look beyond this near-term noise, and from a 3-year perspective, I think these are good accumulation points here, or 10-20% are good accumulation points for the likes of Zomato, Nykaa, etc.
Okay, all right. Time to move on then, and let's get to the second headline now. We spoke to Anil Agarwal, the founder and chairman of mining company Vedanta. He's extremely confident about the company's financial health. Speaking exclusively to CNBC-TV18, Agarwal said that $30 billion in revenue and $9 billion in profits. Vedanta has enough internal accruals to repay debt and even raise fresh funds. Let's hear out what he had to tell us.
Very comfortable, every penny has been made. Yeah. So there is no question. We have, number one, we have enough internal accrual to take care of all our debt payment. On the parallel, we have enough resources to raise debt, which is the regular business of ours, to make sure that each payment is made on time. Last 15 years, never this kind of raise, never been company was such a good shape.
Yeah, right.
And never been this question been asked.
Right. Mr. Agarwal, your Vedanta resources, normally all the payments, if I look at the previous quarters, you have made it in advance and by a good margin. And this time around, there are a couple of payments that are coming up, say, in the next couple of months, which they're still outstanding. So that's why the street is a little bit jittery on Vedanta resources. But you're telling us that you're confident you're going to be making those payments?
More than confident. More than confident. As far as the bond is concerned, sometimes there is an opportunity people to make money. People to make money, where you will get this kind of yield? A common man should buy this bond because this is a 50% gain. Because this is the greatest opportunity to make money on Vedanta bond. I'm saying why government has agreed that we will sell 100% share 20 years back. How much you hold us our leg not to run. They have to take a decision to disinvest this 29%.
Yes.
If there is a clear-cut agreement that they will be divesting to us with a particular formula, and government can get probably 50,000 crore, 40,000 crore.
Well, Mr. Agarwal sounding as confident as ever on the current Vedanta resources debt payment that is due. But let's move on then. The third headline today, Adani Group stocks, well, they continued gains for the fifth straight session. 8 of the 10 stocks except ACC and Ambuja ended in the green. The group also added 30,000 crores of market capitalization in this session. It has added market cap worth over 2 lakh crore rupees in last 5 sessions. Seema Modi spoke to Rajiv Jain of GQG after their investment of 15,000 crores in Adani Group. Jain said they did their due diligence before making this big bet. Let's hear him out.
Accusations of fraud and stock price manipulation not stopping Rajiv Jain, the $92 billion U.S. asset manager, from investing in Adani, the embattled industrialist. Jain, the CIO of GQG Partners, who resides in Florida, telling CNBC in an exclusive broadcast interview he read the Hindenburg report, but his own research has led him to believe that Adani's infrastructure portfolio is a good bet.
We've read the report, but at the end of the day, we get paid to do our own research, and we did our own work, and we had slightly different opinion. We followed some of these names for actually almost 5 years. We never did anything, but after doing our due diligence, we talked to some of the bankers, we talked to some of their partners, and actually, it's kind of remarkable how consistent the feedback was. In fact, one of the largest bankers to them, we asked them point blank, would you ever give them more money? He said, of course we would.
Now, Jain's $1.9 billion investment into 4 of Adani's companies, sending shares of Adani Enterprise, Adani Ports higher on the week. And it comes as India's Supreme Court has opened an investigation into Adani's practices. It's a unique investment for Jain, though, who's best known for investing in safe, stable growing companies in the tobacco and energy space. He bought ExxonMobil in the summer of 2021, but he pointed to the drop in the stock price and Adani's assets from the Mumbai airport to India's largest port, which he says will only grow more valuable as the country prioritizes new reforms. Separately, I am hearing that Adani is headed on a roadshow to Europe and the U.S. to market his bonds to fixed income investors in the coming weeks.
Well, LIC chairperson Mr. Kumar as well is upbeat about Adani Group's business prospects. He also said that he has met the top management at Adani. Let's hear him out.
I can only confirm that the conversation has happened with the department, but there's nothing I can state as of now on the outcome of that meeting. But yes, we have had the meeting.
Are you more confident than you were about a month ago on the business prospects, not the stock price, the business prospects?
I believe so. We are quite happy about the meeting.
Well, moving on to the insurance space, then the centre is working on bringing clarity around the taxation on long-term savings plans. Sources say that the government is currently discussing a possible increase in threshold for taxation life insurance policies. Yash Jain, he's been on top of that. He's joining us to fill us in with more on that. Yash?
Well, since the time the budget announcement was made on taxing long-term savings policies, there were several questions. Initially, they were on the model of this taxation itself, but one question which persisted was that who gets to choose what policy gets taxed once that 5 lakh limit is breached. What we've been given to understand from our sources is that that very question is still, there very much existent as far as the policy makers are concerned. The government is seeking views in terms of making it clear and giving additional clarity in terms of who gets to choose which policy gets taxed in case the 5 lakh limit is breached. Not just that, we've also been given to understand that the government is also considering views when it comes to raising that threshold of 5 lakh rupees when it comes to taxation on long-term savings policies. Of course, there were several representations which are made by the industry itself, the industry bodies, to the finance minister and the government, essentially seeking a higher threshold when it comes to taxing life insurance policies. The government is at this point of time considering all those views, whether that limit has to be 7 lakh or even 10 lakhs are the 2 points which are under consideration. Of course, no final decision has been made so far, but it will be interesting to see the course of events as far as these 2 important changes are concerned.
Well, moving to more insurance news, GIC-RD, the CMD, believes that good growth trend to continue in Q4. He adds that more companies are contemplating agricultural insurance because it's a big ticket item. Take a look.
Q3 has been very good for us. Our ratios have been very, very satisfying to us as management. Q4, the trend will continue. With the amount of push the government has given in the budget for infrastructure, there is going to be a big plus for us in the sector, especially reinsurance, because these big ticket infrastructure projects need reinsurance. It is motor and health which form the bulk of the direct insurance. Unfortunately, they do not require much of reinsurance. So the next to become fire and agri. Now both of these will see a change in the coming 23-24 because in the property segment, as I said earlier, because of the huge impetus being given by the budget for infrastructure, we will see a growth there. For agriculture also, if that new scheme comes in, and now that the companies are also, more and more companies are contemplating writing agriculture, because that is big ticket. That will again see a good growth.
Well, let's turn our attention to the diagnostic space, and we got some opinion earlier today. Ravinder Kumar of Lupin Diagnostics says that prices have been in control for the past 6 to around 8 months, while Prakash Agarwal of Axis Capital says that gross margins have been impacted by rising raw material prices.
Things has improved pretty well in a couple of months, what we are seeing right now, and there are different segment of player which are in retail as well as on digital side. And we are typically in the retail segment where we are doing pretty well, and the price is quite under control for last 6 to 8 months, and we are seeing it in right swings to move on. We have now more than 400 plus outlets which are operating all across West and East India. And we recently launched our South India operation from Hyderabad, and we are on track in terms of driving the network reach in tier 2 and tier 3 cities market. But at a business level, we are right now in more than 125 plus cities. We are driving footfalls.
While the discounts remain very high, I mean, they range at 40 to 75% from the rack rates which the large diagnostic companies are offering. At the margin, the discounts are coming down, but that is only at the margin. So even after the discounts coming down, the prices are still 40 to 75% lower. We are a little negative on the margin side. We believe that the costs have gone up. Cost of doing business has gone up. A. B. All the companies are expanding. So there is a threshold cost of setting up as well as bringing it to break even. So that cost is there. Plus raw material prices also have increased.
Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines that we're tracking for you.